Good evening. This is Nick Inman from VolumeProfileTrader.com, part 2 on Wednesday, November 16th. Sorry about last video. I accidentally cut it short by hitting stop instead of pause on the video. So luckily I was finished with the chart I was looking at. So let's just jump into a few more charts. We're going to cover the euro, the dollar, gold, silver, Apple, and the VXX ETF. So we're going to look at a few opportunities and why it looks like the market has the potential to go lower. Let's jump into the euro. We are breaking, this blue line's our value area low for the year. We're breaking below that. Our next support level is down at 131 on the FXE. I don't know what it is on the 60, the euro futures contract, but what we're seeing, I guess it doesn't really matter. What we're seeing here on the FXE, which tracks the euro, is we had our rally at the beginning of the year, sideways consolidation, breakdown, test of the breakdown, and now a move lower. So it looks like this is a topping pattern, and it's really starting to catch a little bit of momentum. What we're seeing here, from a volume profile standpoint, is a failure off the point of control for the year, a really big failure, and a move down, minor support at the value area, which got crushed, and now we're looking to test the recent lows, and it's hard to say if it's going to get there. I'm sure there will be some gyrations, maybe there won't be, but it looks like this 140 level, really the 142 on the euro, it's good as gone for now. And if you're holding the euro from a long standpoint, I think you're in the wrong boat. So let's look at the dollar to get a better perspective. So if the euro looks like a topping pattern, the dollar must look like a bottoming pattern, because we saw a downtrend, a sideways consolidation, the point of control form at the bottom of the range. You know that's a bullish development if you've been following volume profile. We saw our breakout, a test back of the point of control, just like the euro, and now it looks like a potential breakout. So yes, we're basically at the turning point for the market in general. And as far as the dollar, it looks like we're going to try and test not quite the highs of the year, but the highs from September or early October, whenever this occurred. So it's, from a momentum standpoint, it looks like the buyers in the dollar have momentum, sellers in euro have momentum, and which means the sellers in the market will have momentum. Unfortunately, the euro and the dollar, they've been trying to tell us something which I haven't done a good job projecting to you guys, and I apologize. But unlike the market, which has been consolidating sideways, the euro has been on the decline. It's been making lower lows, lower highs, really for the last month, and it's unfortunate because it's probably going to bring the equities market down with it. So as I switch over to the GLD, it's a different dynamic in terms of the volume profile chart. And because GLD has trended and made higher highs, higher lows practically all year, except for the recent August, and now it looks like a potential November rollover, GLD has been nothing but a buy on weakness and a hold. So the volume profile chart won't be as dynamic, because what we're probably going to end up doing on GLD is consolidating sideways. Maybe we rally, maybe we sell off, but generally speaking, after a nice rally, which we've seen in GLD, and a likely near-term high at 185 on the GLD, and a near-term low of, let's call it 155, we're probably going to be in a balanced state, and that's just the cycle that markets go through. So as far as your point of control for the second half of 2011, we are failing against that right now, the 175 level on GLD. And although support both value area and the point of control for the range down here they're positive for the buyers of GLD. For right now, GLD is a short-term sell unless if we can make a nice bottoming pattern, whether it be back down, a test of this general area and a move higher, or whatever the case may be, a test back down to the 160 level. Until we go above 175 on the GLD, it's going to be hard to be enthusiastic about gold, just because the recent volume profile development. It's an ongoing process, and your job as a trader is just to stay on top of it and to allow for the volume profile to make your trading decisions. Therefore, you don't have emotions in the trading world in terms of decision making. And once again, as we move on to SLV silver, it has a different dynamic as well. You can see that although we had a huge rally this year, since then, the market action has been in between both the high and the low of that rally from peak to trough. So what we're seeing here is the volume profile chart that's developed is we have value area low around 29 on the SLV. It held as good support back in September, October, and we had a nice move, but the point of control for the range is just above 34. You can see these moving averages coming down. It's like a ceiling is pushing on SLV, and today we had a decent down day, down 2.5%. The volume, it's hard to gauge the volume just because the huge volume back in April and May, but we're getting decent volume relative, as I get rid of, relative, to the last week or two. So a potential rollover in SLV isn't uncommon, and all of this is leading up to being long dollars and basically out of everything else. Hold cash for the time being unless the market gives you a different sense of direction. So SLV, it's a sell if you're long for now. Unfortunately, we were looking for a breakout, we didn't get it, and this is what we're getting. We're getting more downside. If you want to look at this trend line as potential support, you can have your stop right below 31. That's fine. Just realize that that's another 4% or so, 5% down from current prices. So looks like there's more downside in SLV and the rest of the market. I suggest to either sell some stock, take some cash, raise some cash, or if you want to speculate to the downside and perhaps buy an inverse ETF or buy some puts on the SPY. If you know what you're doing, you have good risk, and we'll just use the SLV for example. You're going against resistance, and you can put your stop loss right above prior market price from the past couple of weeks. So anyways, I hope this helps. I hope you realize that my bias has shifted just due to price action and how volume profile has printed. We still have a chance for the buyers of the market to hold this, but it's looking bad, and I just feel like the market's heavy and there's more downside to come. So protect your downside or get exposure to the downside if you want. But unfortunately, the upside just doesn't look great right now.